What's up, everybody? Zoe Azubuki with Edge Home Finance here to give you a market update. Yep, that's correct. This is new for 2021. I got one of my goals in action already. Just hope I keep it consistent. That's the goal. Got to keep your goals consistent. Happy New Year, by the way, and pray that everyone has a prosperous and awesome and blessed 2021. All right, so today we're going to talk about teaser rates. So what's teaser rates? Teaser rates are basically, they've generally been known as rates that are offered as an introductory rate. And they're set up to kind of entice the borrower to jump into the credit product that the lender is offering. So in the mortgage industry, you typically see these with ARMs, that's adjustable rate mortgages. But because the rates have been so low, and we're in this low rate environment, ARMs aren't really relevant right now. And so what you have is a huge competitive industry trying to put out their relevant fees behind rates that appear low, but they kind of are backed with a bunch of junk fees, if you will, otherwise known as origination costs or buy down points. So for example, this is what we're seeing a lot of. We're seeing lenders putting things like 2.25% with 2 points. And so you'll see the rate of just an everyday borrower who doesn't really do loans for a living, right? You don't know what 2 points means. You just see the 2.25%. But what 2 points actually means is you're going to be charged 2%. 2 points is referring to percentage points. So in an example of a $400,000 loan, you would be paying $8,000 on top of all the other closing costs for that particular rate. So you just got to be careful. This is, again, we're seeing this a lot, especially with the really low interest rate environment. This is what lenders are doing to try to make themselves relevant, to try to stay competitive. And if you're not careful, you'll find yourself locking a loan that's got a whole bunch of absorbent fees that you don't really want. So just be on the lookout for stuff like that. You'll also see this kind of thing with terms. They won't always clarify right up front that a particular rate is for a particular term. You got to really read the fine print. And sometimes these fine print is printed really small, if you know what I mean. So, for example, you'll see a 15-year rate quote, and if you don't look for that fine print, you'll think it's a 30-year rate quote. And 15-year rates are way lower than 30-year rates. And we know that most borrowers are looking for 30-year terms instead of 15. So just be on the lookout for that. As a broker, we have the ability to shop rates for you. That's our competitive advantage. But more importantly, we really advise and explain to our clients what actually goes in to a specific rate for their scenario. And so that's gonna fall into just understanding what your credit report and your credit scores actually mean in regards to the rate that you get. How much down payment is gonna contribute to the rate that you get, the type of loan program. These are some of the key factors that go into that. So give me a call anytime and I can help you understand what goes into that interest rate quote that you're getting, and would also love to see if we can get you a quote for the same scenario and see how we can be competitive for you and help you figuring out what's the best route to go. So that's all I got for today's market update. Hope everyone has, again, a happy new year. Be blessed. Until next time, take care.